Okay, yo guys. Okay, we're gonna keep this one a little shorter than the previous one. Just gonna do a morning walkthrough pretty much. Bear with me. I'm a little sleep deprived right now, so I'm probably gonna say something stupid and wrong, but just hang in there. Okay, just gonna do the walkthrough. Starting at the hourly. My thesis last night was that if 54 doesn't, or 45 rather, doesn't hold, that's pretty much the make or break line for the Bulls. It looks like we're reclaiming it currently, which is a good sign. Um, Easily could get upside to like here, like 46 and change. It's probably where you want to short again. That would be well, I don't know. I'll word it like this. If you get a short signal up here, you definitely take it, but you don't just blindly short that. Just because from a bull thesis, us reclaiming 42 is showing that bulls want to accept that as fair value. So yeah, for me, as long as we're over this, any shorts I take will be to protect myself. When I say that, I'm not referring to my scalping, right? Like the kind of trading I'm going to talk to you guys about is like the higher time frame kind of stuff that I can actually share on Twitter. Um, just some initial thoughts. You could see that like on Mex, for example, ever since the bottom, that like Delta's been winding up. It's another thing to be cautious of. At some point, this Delta needs to be unwound. So if you're a bull, what you want that to look like is a slow bleed through the 40s, and then maybe like a extreme sell-off once you get to like 43, 42. We'll talk about that structure since that's very popular on Twitter right now. Right here, you have a composite and you have singles and you have a lot of things actually. You have a low volume node, blah blah. This is a pretty good area to look to get exposure. But because it's so obvious to everybody, it doesn't matter if you're a price action trader, you're a flow trader, you're a whatever trader. This will be an area that literally everybody will look at. So because of that, I don't think that it'll be as cleanly as you expect. I wouldn't recommend just leaving resting bids down here because I think how I recommend and how I will trade it is just watching it in real time and then making a decision. Because either A, I think it's going to front run it, or B, it's going to go right through it, right? I don't think it's going to come to this and just bounce perfectly just because that's what every person expects. So because of that, I think that we're either going to get to the low volume node and front run this, right? So maybe wick into here and buyers show up and we get back, or we maybe even just get like cut right through this and then get bought back up. Those are the bull thesis for this. The other bull thesis is just staying above 45. The longer we stay above 45, the better. I mean, the stronger the thesis is. You could see that we're trying to build value over it. Um, and this could end up being just like this. That's what you have to be cautious of. Especially you can see us pushing up into it, right? We're chopping into the resistance. So some caution is required. Yes, expect the unexpected. Indeed. Which there isn't really a lot of unexpected things. I mean, really, it's just what I said that I do think that's a good rule of thumb in general to follow is that like when things seem very obvious, you should expect that even if that scenario is going to play out, how's it going to fuck people in the process? And the two ways are front running it or wicking through it violently and destroying all the people that think that they're just going to chill with resting orders and casually scoop up a dip. Um, so let's see. Um, the bear thesis is that we lose this level. As soon as we lose this level, again, I go back into protection mode. I'll talk about the hedging stuff in a bit. But yeah, as soon as we lose 45, I'm looking to be neutral down to at least 44. I think that the 44 level is a very, very likely level to get swept. Assuming, this is all contingent upon the Bulls not being able to hold 45. If they hold 45, none of this is going to happen. So assuming they don't hold 45, I'm going to go protection mode down to 40 minimum, 44, with the potential of, maybe 41 or something. My bias definitely is that like any major sell-offs I'm going to be using to re-add exposure and to, be more positioned for upside. I think that it makes sense that we'll test, that we'll just, maybe test the point of breakout here and continue up. Let's see how to word it. There's a lot of these are the areas where you have to pay the most attention to everything, because these are the areas where you're either gonna kill it or you're gonna get crushed, right? Because I'm long bias into resistance, and that's a really unwise thing to do if you don't have some ways to protect yourself. So, right, because of that, at every area of potential trouble, um, whether that's us, right, marking up into resistance or marking down and flipping resistance, support into resistance, any of those types of scenarios, and I'm just instantly going to be trying to hedge. So, I hope all that makes sense. I am, again, to reiterate, I am still bullish. However, you have to be cautious, because anybody that's been around for a while, I think that like being bullish more often than not is obviously the play, but you have to have that rational side to you the whole time that tells you this could be the area where price fails, just to protect yourself. If you've been around a long time, you've probably puked some money back to some dumps, and yeah, we try to avoid that stuff. So, talk a little bit about my trade. It's not really a trade. Like how I protected myself last night was that, like I said, as soon as 45K failed, that I was gonna go into protection mode. If we get what the prior price action looked like to that, right? We were getting into this level and we were getting defended. This time around, you could see the sluggishness, and yeah, we just printed a fat sell candle right through. So I hedged on December right here, and at last night when I saw us reclaim the VWAP and then start to trade over the value area low of the day, I closed it. And a little lesson for the fellas, that this is really where you want to use the longer dated futures contracts to control your risk, because the premiums have gotten a little out there. I tweeted about it. I wonder if I could just... Will this show my screen? Okay. This. So just to be mindful of, this doesn't have anything to do with the premiums, but it's the same type of logic. That if we look at the Bitcoin futures, it looks the same way, that you're gonna have your spot here, and you're gonna have all your futures contracts are gonna be all much more expensive. So because of that, that's what I'm gonna use to hedge, because they're more expensive than spot. So essentially, I'm hedging it. I don't even remember what I hedged at last night. It was like $3,000 or $4,000 higher than spot. I'm pretty sure at least like $2,000 or $3,000 higher than spot. So you're locking in your spot price higher, and coupled with that, the fact that the premium is there, when people get bearish and there's a premium, the premium normally starts to dissipate. So I shorted here, but in reality, on my futures contract, it was really more like I was shorting up here because by the time that spot had started to come back to my entry, it was lower on the futures contract. I hope that makes sense. I'm really tired, so I'm not doing that good job of explaining myself. But right, since the premium on the futures contract was going down, since after the close people were bearish, it was a very bearish close for us yesterday. So because of that, um, the people that are trading these futures contracts are more eager to sell than they are to buy, so the premium on the futures contract was going down the whole time after I had entered. I hope that makes sense. So what I'm depicting is how, at least on short term, or I guess on longer term, it applies the same way that using futures to reduce risk, like the market dynamics at premium, can actually help you. So I hope that makes sense. If anybody has any questions, definitely ask. I'll try to explain it better. I am extremely tired right now, guys. I don't know if you can tell by my voice or not. Okay, moving forward, talk about like the day's plan. Okay, so we have a pretty nice neutral day type here. However, the context of where the neutral day type is forming is, not that great. So, like yesterday, it really looked like we were trying to accept into this value. Because at the start of the day, this was a very neutral day type. This was, so let's draw it. We'll draw it for educational purposes. This was a very neutral day type at first, okay? And then at the end of the day, volume came in at the lows and you broke it. So to me, I mean that is why I changed bias. As soon as this happened, where we didn't get a bounce from the level that I expected buyers to step in, and volume came in. There's a lot of volume that came in, like a lot. Like if I look at like the delta from yesterday, it's pretty crazy. So my point is that following that, we need to be a little more cautious, and it's hard to have a really strong bias because all that's separating us from being bull or bear is like a $50 price move. So you want to see chop on either side of this line to have bias. So we're either going to chop below it to come down here, or we're going to chop above it to come up here, right? That's yesterday's, so that doesn't matter. And maybe this high, maybe this, that's the weekly volume point of control. That's kind of what I'm looking for. So I would expect things to be far more balanced right now. However, because of the fact that that volume came in at the low of yesterday, that is a reason to maybe expect slightly more imbalanced price action, which could take us to 44 pretty quickly, I would say. I mean, yeah, these lows are pretty prime right here. There's definitely stops here. So yeah, I mean, basically I will draw the plan one more time to make it a little cleaner. Do it on the 5-minute too. That's a fade. It's our weekly. Which line is that? Okay. So I would say this is a fade up here. Anything above that line, and you don't want to be. I don't mean like a wick, right? Any sideways price action above this, you don't want to be bearish anymore, I would say. Bearish to this point, bullish from here to here, bearish from here to here. Those are the simple plans that I'm going to give you guys. To reiterate the alpha that I've leaked before, try to figure out a intraday bias. Do I think that today is going to go up Do I think it's going to go down? Do I think it's going to go sideways? These are the three options. Try to pick which one you think it's going to be, and then you lean into that bias the rest of the day until you're wrong, and you scalp with that direction. So when we accept above here, and I have a long bias, this is what my trades, or I mean, you guys have, I've started to be a lot more open on my Twitter about posting what my trades look like after the fact. I'm never going to show them in real time because I can't. It's just not possible because I click too many buttons. But you guys have seen now how my trading style will look like. If I think price is going to do that, it's buying, selling, selling, buying, buying, selling. That is the key right there. You can unironically turn losing trades where your bias and your thesis is wrong into profitable trades still when you scale, like I've been starting to introduce to you guys. Like, strangely enough, there's situations where I'll be wrong about um, a bias, and I will trade with that bias, and even sometimes I'll even close a position below entry or against my entry and still make money because of the scaling. Now, obviously, those aren't going to be home run trades or anything, but it's better to if you can make some scraps on a trade that should be a loss. That's a pretty big win for you. I really really like the quote from Light not that long ago about I can't remember exactly what he said. It was something along the lines of taking pride in not losing money when you're wrong, right? So the idea that you put more emphasis and you care more about avoiding capital loss when you have a incorrect thesis as opposed to how much money you make when your thesis is correct. I think that's a really good mindset, which also just brings me back to the process over outcome, which I would suggest everybody goes on my Twitter and sees one of the first things I posted this morning. I retweeted Visualize Alpha's post from Tommy's thread, which is all about process over outcome. It's on my page. It's on Tommy's page. Watch it. It's very that logic had a very really big impact on me last year in particular. That's where I really started to hit my stride was like the beginning to middle of last year, and that mindset of gamifying trading was really big for me. No, today's bias isn't really bullish. It's super neutral right now because we're right at the level, um, right? This level that we're trading at right now is the level for um, bullish or bias for me. That has nothing to do with anybody else. It's just my way of looking at this stuff is that this is the end all be all of levels right here, 45.2. Really, it's like 45.2 and a half or something. I just round, yeah, see, like 45, 267. I always round my levels up or down when I'm writing them out to you guys, just so you know. Like when I say 45, it's never actually 45. It's plus or minus, just so you know that. But I'm not gonna sit there and write out 5 digits. It's not something that you'll watch CXZ. It's a thread, but yeah, I strongly recommend reading it. I even have incorporated like even in my psychological threads, I have that added in there just because like Tommy was one of my mentors, so that was a big lesson for me. So I don't think Visualize did this on purpose, but he took one of my threads and gave me credit for the. I could show it to you guys. Oh, that's not the right one. This guy. So make me feel better about scamming Tommy. I don't even know if he's necessarily aware. This is the thread I was talking about, by the way. Let's see if we can find mine. Uh, This wasn't very smart, guys. How old am I? Nice try. Probably already said that before anyways. Could probably just fucking guess and figure it out anyways, because it's like, I'm not old and I'm not really young, so there's really only like one price bracket where that could be. Finally. So this concept right here is pretty big, I think. So in your journal, I think it's very wise for you to record not just how you traded, what setup it was, all that kind of stuff, but your emotional stuff too. Early on in particular, I don't really place that much emphasis on this anymore, but this was a big deal for me early on, so I would um, suggest thinking in this way, right? So now that everybody has been introduced to the profile and we understand what distributions are, and we're fair, and have a fair understanding of like a bell curve. Um, Take that same concept and apply it to your emotional spectrum. So when we're in the middle, the mean, that's when you're feeling neutral. You don't feel particularly high or particularly low. You're just in the middle. And that's where the majority of our time is spent. And the moments in life when you are at your emotional lows and highs are where you're most likely to fuck up. And those are the moments where we're most likely to, have issues and stuff. So because of that, I think it's very wise to pay attention to when you are in these moments, right? So when you're at the emotional lows and highs. Like for yesterday, for example, I can give a good example for how I watched myself go from the lows to the highs very quickly. The first scalp I took yesterday, I longed Bitcoin and it didn't go very well for me. It was one of those scenarios where my setup was really good, but it just didn't matter because the sellers were just too strong in the moment, and I took a loss on it, and I was feeling very not good because it was one of those moments where you just kind of realize like um, it was a very easily avoidable mistake, and instead of um, realizing I was wrong immediately, I added to the position and took a larger loss than I needed to. So I wasn't feeling too hot. And then by the end of the day, I did end up catching um, quite a few good trades. I caught a good long and then a good short to follow it. And at the end of the day, I remember feeling like I couldn't lose because I won like several trades in a row the second half of the day. And I'm just depicting a type of scenario where you're going to have these swings and just pay attention to it. I don't know if any of that sunk with you guys, but I think it's very impactful. So just try to pay attention to where you're at. And I don't know if Tommy invented it, but I definitely got this idea from Tommy. So I tried to tell. I don't know if I did a good enough job of trying to explain to visualize that this wasn't my thought. I just put it in my thread because it was so important to me back then. But anyways, back to the chart. There you go. Bulls are fighting. Ultimately, it's not really going to matter what the derivatives traders are doing. I don't think it really has a lot more to do with the spot market, what they're thinking right now. But this is a good sign for bulls, especially now that we are in the London or we are in the New York session, historically the most bullish session. So yeah, let's see if they can pick it up. If I start to see, I won't take this when I'm on with you guys. We'll probably be ending it soon here anyways. But I definitely think if I see some sideways chop and I get a long signal, we're gonna punt it. Although, having said that, it probably will be not a very large trade size, but we'll see. That's dynamic. That's random, but that is another reason why I like to try to show people on scaling is that you could just your um, trade thesis might not necessarily change that much, but you can just change your risk constantly by adding and subtracting. Let me go through chat here and make sure I didn't miss anything important. I've been talking for a while. Yes, someday you will realize it is better to not lose money when wrong rather than make money when right. That is very accurate. Yeah, the mood, your mood when you trade is very, very important. I noticed that like if I'm irritable about something, or it's the summertime here and it's hot as fuck where I live, to the point where even though I keep my house, I keep my thermostat cold. You just can't get it that cold, especially because I work in a smaller office with multiple computers running. What I'm getting at is though, I notice that when I'm physically sweating in my chair, which is sadly not that uncommon as when I'm trading, I trade worse. I'm a lot more likely to get like frustrated with a trade just because like actually being physically hot affects your brain. I like the Bobby Axelrod quote, although I don't think that that's really going to be the case for most people. In order to not feel anything from big wins, you gotta have so much experience under your belt. That's the only way that you desensitize yourself to getting excited about a win. That's it's really you gotta have a lot of wins, a lot of big wins. And I've only had a few big wins in my life, all from higher time frame swing trading, and I've never come close to not getting you know excited about that stuff. I'm pretty confident in I have a lot of experience now, but I still get super excited when I do get when the thesis does play out and you have a little luck on your side and you get a big win. Um, it doesn't matter who you are; it's easy to become irrational with that. A good example is DeFi for me. Um, I missed DeFi summer mostly and was a little salty about it, so I planned to go heavy on DeFi again. So like early September into like late November, I was going hard buying DeFi, all the blue chips. Um, I had I had very large positions. I martingaled into them originally because in September I'm pretty sure DeFi was still trending down. I martingaled like a retard basically, and somehow I got lucky and got rewarded for it. And I think back to how I handled those positions in like in January and stuff I was fine, but once we got into like February and March, I continued to be blindly bullish when it was pretty obvious that the momentum had died from DeFi and had transitioned to other things, mainly shit. The more shit the coin was, the more the more it was going up. But so my point is that it's when you win, it's very easy to get stuck with that mindset, and the ability to change and recognize when it's over is very, very difficult. So I hope that helps somebody. The takeaway from that is I made a lot of money off DeFi, and then I ended up giving more of it back than I should have. Not to where, killed me or anything, but I definitely gave back a lot. Part of that was because I tried to hedge my entire altcoin portfolio with one ETH short. That was a big mistake. I kind of figured that ETH would mirror the alts, pretty closely on the downside in May, and that was not the case. ETH actually, probably the first cycle ever, ETH actually held up better than in previous cycles this time around. It just goes to show how ETH is becoming you know, a real asset. It's in the same category as Bitcoin, if not now soon, in people's minds. because that's all that matters is once people make that decision that it's equivalent to Bitcoin or whatever, or should be respected like Bitcoin, then it is reflexivity. Okay, going through some questions. Okay, question about how to start with order flow. I mean, first you just got to don't start buying tools and doing any of that kind of stuff. Just start by um, trying to understand the relationship between passive and aggressive participants. That's definitely where you should start. So start to learn the difference between market traders and limit traders and try to understand how that relationship works. Pay attention to delta, right? The difference between the market participants, and then learn about open interest. And with those like 3 or 4 things right there, it's a really good place to start with flow. Don't start with like the kind of things that you see me showing you. Don't start with print. Start with very simple, right? Start with open interest. Start with the difference between passive and aggressive, and maybe delta and CBD. Focus in on those things first because they're a little easier to grasp. And those are the kind of the backbone of the other things, right? It's like the same argument as why you don't want to trade flow without price action understanding. You don't want to trade a footprint without the understanding of that relationship between passive and aggressive participants. So half the charts I show you can't read. Well, in anything in life, when you're not comfortable with something or you are out of your element, that's always going to be the case. Something feels foreign to you because you don't have experience with it. But if you look at prints more, you know, um, like for this chart, for example, right? Learn to ignore all the lines, ignore maybe all the profile stuff, and really focus in on where volume comes in at the levels. I mean, couldn't ask for a more perfect example right here. Below the value area low, big buyer. You expect these guys to defend themselves. I mean, yeah. So I just to answer the question, just it takes time. It's not like I figured out how to do any of this stuff quickly. Everything, you know, started the same way you guys, everybody did. I traded altcoins with Ichimoku and moving averages back many years ago, and I just eventually transitioned over to this stuff because this is what clicked with me. So how do you personally manage your risk per trade if you're always adding and subtracting? So I don't really have a good answer for anybody on that because the answer, sadly, is just that I put blind faith in myself and my system that I'm going to win more than I'm going to lose. I mean, that's kind of what it comes down to. I have extreme confidence that as long as I trade my system well, it will make money, right? The only real variable in there that's going to stop me from making money is me. My system is so good, I truly have a degree of blind faith that I will put into it. And the human element of, um, contextualizing things and then combining that context with your mechanical system. So how to answer it better? I know here you still have an area of invalidation, right? So when you see, look at a trade. When you see this, all these trades are one long, essentially. I wish I should have taken the screenshot after I closed the trade, because I actually closed the trade fully. This move went further than I expected to. This is actually lovely, and it went like right into the right here. right into the VWAP. Love to see it. Um, the thesis is that I don't want to see us break down below a certain point. But the way I trade, I know that price can always go against me for a little bit before I'm right. It's not that uncommon for a trade to do this before it, and I'm just going to keep hitting in. And I mean, I have something that tells me when I'm wrong or tells me that I'm likely wrong. So, yeah, I mean, it's really difficult for me to word it because I'm trying to answer it accurately for you without giving away my edge that I have here. Yeah, man, just fucking do it really small if you trade. Like on Nance, for example, go and trade literally the minimum contract size, which is like 0.01 or 0.001 or something like that. Go trade that and just spam clips of that because it's not gonna, kill you if you fuck that up. So, anyways, yeah, I'm sorry I don't have a really good answer for that. And like the risk stuff, I'm gonna leak edge regarding the risk stuff, but it's gonna be in the educational stuff that is gonna be paid. So yeah, I hope something I said helped. I think I tried. I did not have any breakfast yet. I'm not much of a breakfast kind of guy, personally. If I do eat breakfast, it's normally like one banana. I like my black coffee and water though, and weed. If I wasn't streaming right now, I'd already be. That's what I do. Anyways, let's see. Good videos, resources regarding hedging. Yes, it is as simple as opening a counter position with the same size. So if you are long one Bitcoin and you want to hedge your Bitcoin, you short one Bitcoin. Um, I don't know where to direct anybody for learning that stuff. The reason why I learned how to hedge out of necessity because I was tired of losing money on things, right? So you're long on some altcoin. Let's say you longed Luna a couple weeks ago and you're just up massively right now. You don't really want to sell your Luna because the trend probably isn't over yet. But when you get to an area that's an obvious area where price could fail, maybe you short Luna um, to go delta neutral for a bit and see how it plays out. And then you have the option to keep the short open and sell some spot if you think it's going to go down, or close the short and let your spot appreciate again if you think it's going to go up. How I like to say it is that you just get to a point where this is obviously an area where price could fail, and you rationalize it as I'm willing to risk X amount to protect my overall holdings. So if you're long one Bitcoin and you're going to hedge one Bitcoin here, let's say I'm willing to, I'm long one Bitcoin, so I have a $45,000 position. I'm going to short 45K as well. So now I'm 1-to-1 on it. And if I'm wrong and Bitcoin goes up maybe $400, I'll cut it. So I'm going to lose $400 to make sure that I protect myself from multi-thousand-dollar downside. That is the logic. You're paying a premium. It's just like options trading, essentially. You're paying a premium, and in your mind, when you enter the trade, you know the premium. You know what you're willing to risk, and you know when your hedge is wrong. And yeah, you go into it with a predetermined amount. And more often than not, I'm not going to like wait. Like for example, my hedge last night. I hedged right here, and my stop loss on the trade was like way up here. I know I'm wrong, and we're super bullish if we get up here. However, you think I'm gonna fucking let myself get stopped out up here, or am I gonna wait for some sort of trigger to close it, right? I mean, that's kind of how it goes. It's not really, it's very unwise, in my opinion, most of the time to let price get to your stop loss and trigger you out for two reasons. One, you probably could have cut the position before the stop loss. That's the obvious answer. That's the answer everybody already understands. What people don't think about too, though, because of inexperience with liquidity, is that when you're going to get stopped out, more often than not, that's going to be at the obvious areas where everybody's getting stopped out. What happens when a lot of people get stopped out at the same time? You get volatility. And what happens when you get volatility? Market makers pull orders. So there's less liquidity available on the books when the stop outs come. So what in reality, if you set your stop at $40, you might actually get stopped out at $50 because of liquidity. So this is an important lesson I learned years ago trading on BitMEX, was that if I thought I was wrong, just even if I market close it, it's better to market close it before my stop loss just to avoid getting slipped. Because I can't tell you how many times I got slipped earlier on from letting myself get hard stopped. For example, I remember one time when Bitcoin was maybe like only $8,000, and I remember getting slipped for 90 something dollars on a Bitcoin trade, and I remember being fucking pissed about it because, relatively, $90 slippage now wouldn't be that big of a deal. But back then, that was a fucking ridiculous amount of slippage for me to eat. Um, I'll never forget that day. I distinctly remember it because I was actually live trading, showing a friend, and I remember putting a stop loss on that I normally wouldn't do because I needed to go to the bathroom, and I came back like 3 or 4 minutes later, and price wicked like fucking hundreds of dollars and slipped me like almost $100, and my friend like watched the trade. Like I was like screen sharing, teaching one of my friends, and he like watched me get raped. I don't know if I could say that on Twitter or YouTube. Oops. Um, Anyways, let's finish. I'm gonna finish this up. Let's go through some of the questions and make sure that went over everything that we should. Do I pay attention to the order book? Yeah, I do. It's a good idea to know where resting liquidity is. A little side lesson though, there's a big difference between resting liquidity. So orders that are on the book are not the same as orders that have been executed. So the reason why I use the print primarily is because the print shows that orders have already transacted. There's a big difference there. I'm not going to make decisions based off of liquidity that could transact. That's what a resting order is. I'm going to make decisions off of the volume that actually goes through. I do have some educational stuff out now between my YouTube and threads on Twitter. Instead of shorting Luna, short weaker alts in the same basket. Yeah, I could see that being a good play. Yeah, Reg Hunter, that is that's what makes it worth it. It's not easy to learn these things. I mean, I hate to be like this, but you guys probably don't even realize how easy people like me make it for you. How I make this shit easy for you guys, because when I wanted to learn these things, I had to learn from all these different fucking old school legacy guys, and you would learn one lesson from this guy and another lesson from that guy and another lesson from the third guy, and you had to learn from all these guys, and the videos were always long. When you would read their blogs, they were blogs from the 90s, and it was kind of rough sometimes to get through. And between just a couple Twitter accounts now, um, I think between Abe's free material and my free material, you should be able to figure out a lot of it. And then once I have my stuff come out, that'll be the end all be all. I think. I don't think you'll need anything else probably. I'm gonna go. My education's gonna go way more in depth than probably anybody else's. No, I don't really have an alternative to Quant Tower. Yeah, we like the Jim Dalton. He I'm not really a Dalton trader for, however, yeah, he's very impactful. No, I was never a part of Crypto Cartel. I was like back in the Crypto Cartel days, I was like a hardcore lurker. I never interacted with anybody or did anything. Those were back in the days where I just that's when I worked on myself in silence. Porn and coffee. Next stream, porn and coffee. The release is pretty soon. Gonna do official announcement for things in like the next week or two, and then the following month. So October, October 1st should be the official day. Um, but don't worry, guys. I get asked about that a lot. Don't worry, you won't miss it, cause it'll get spammed. Will my Twitch be free? I don't understand. It's free for everybody. If you want to subscribe to my Twitch, you can. I don't even think I have a sub button on that account yet. And yeah, speaking of that, we'll move over there next time. I didn't want to set it up this morning, to be honest. Uh, yeah, I'll leak the entertainment thing to you guys when I do share my Twitch. You can go through my old Twitch videos and see me dunking on kids in video games when I used to be a gamer. How much profit and percentage monthly do you think is acceptable for a scalper? Uh, I don't know how to answer that. It's kind of a generic question, unfortunately. Um, yeah, I don't even know what to say to that one, man. It's different for everybody. And percentage, I know that like people talk about percentage a lot, so, and I'm not gonna like definitively say those people are wrong or anything, but like I don't give a fuck about that personally. I care about how much I'm making or losing in dollars, right? So the reason why I say that is because like 5% of $1,000, you're not gonna pay your bills, but 5% of $10 million, and you're gonna pay your bills. So that's the difference. Like percentage, I don't know. I hear the percentage argument. I'm not gonna say they're right or wrong. I'm just gonna say that I don't think about that. If I was to stream, I wouldn't do CS. I would stream Valorant if I was going to. I haven't played Counter Strike in a little while now. Want to play chess? Yeah, I actually have been getting down on chess with two of my friends lately. It's a it's a fun game. I'm not good at chess. However, I'm learning. I have traded other markets. I've traded um I've traded commodities, um, and I've traded futures a little bit. I did a decent amount of volume trading commodities in 2019, and actually one of my biggest wins in my life was on silver in 2019. I went really heavy on that play, the heaviest I had ever gone in my life at the time, and yeah, I got lucky. It played out pretty well for me. Um, I've also traded um, the micro ES a little bit. So for people that don't know, everybody knows what the S&P is. The most common futures contract for the ES is called the ES. Um, but the contract sizes are pretty large. Last time I checked, they're like 300K contract sizes, so I can't effectively scale trade 300K contracts. But there's something called a micro ES, the mini ES, and those contracts are much smaller. So I traded the micro ES for a bit, but I basically got set up and I was going to become a full-time micro ES trader, and then the Bitcoin trend started to really pick up. So I obviously just haven't touched that account. I think I've executed like 3 or 4 trades on that account, and it's just been collecting dust for a year now, because crypto's been just clearly the market to pay attention to. Something you really shouldn't do learning order flow? I don't know. No. Shouldn't put blind faith in people that you're learning from. It's probably a good piece I could say. When you learn something from somebody, right? When somebody explains something, don't just put blind faith in it, go verify it. A lot of information around flow and profile and stuff that you see on Twitter nowadays is, I don't want to say wrong, but maybe expressed not so well. So because of that, I would be careful with what you read sometimes. Yeah, we'll get some chess games going. The fuck's going on with my Discord? Whatever. Anyways, okay. How much of a discrepancy between supply and demand strategies and order flow? Hmm. So this is an interesting question about supply and demand versus flow. And here's what I'll say is that I'm not a supply and demand trader. I use that logic definitely of like, this is obviously an area of demand, obviously an area of supply. I get that, right? I'm not out here drawing order blocks on my chart and shit. Where you're, where I think you're wrong with what you said though is that supply and demand strategies are mainly focused on sitting orders. I don't think that's the case at all. Um, we don't bounce off of these order blocks because people put resting orders here. Resting orders don't create bounces. Resting orders just give somebody the ability to sell down here, basically. What bounces is market aggression, people buying. So, that's why I would say that like transacted flow is way more important than theoretical flow, because you could theoretically have $150 billion of resting orders right here, but when price comes to it, whether or not those orders allow themselves to get hit or not is a question, right? So transacted volume greater than non-transacted volume, period. Uh, and I'll end that by saying that the concept of supply and demand are great places to start with this stuff. They work. I just moved away from that. I'm not gonna draw the. I don't need to like sit here and draw the box on my screen to just know um, where supply and demand is, right? Demand and supply, like they're obvious, right? Supply, demand, kind of demand, definitely demand, probably demand. These are definite. Like there's no doubt in my mind that bulls wouldn't buy these two areas, right? At least for a relief bounce. So, anyways, idolize no man, most definitely. Yeah, big lesson for me was as I went further down my path, you end up getting to interact with people that you look up to, and it's unwise to put them on the pedestal. They're just a person just like you. It's cool though, right? Like I've been able to become friends with people that I idolized when I was newer, and yeah, you just eventually become friends with those people, and you just figure out they're just people just like you. So yeah, definitely idolize nobody. There's a difference between respecting people and idolizing people, right? Like there's definitely a few traders out there that I have a lot of respect for, but maybe only idolize like one or two guys. There's certain participants where you just can't help but acknowledge that they're hitters, like the wolf. I don't use heat maps. It's the same argument that I was making earlier. I'm not saying that you can't use them and that they don't have a purpose, right? That they do, because essentially what heat maps do is they're showing you advertised liquidity. They're saying that like a market maker or a participant is saying, I am advertising a buy or sell at this level, but they're not saying that they're going to do it. And that's where the flow comes in, right? So maybe if you want to be a heat map trader and you want to identify that, oh, there's a large buy or sell wall at level X, don't just assume it's going to fill. Actually watch if it's filling or not. So if you're a heat map trader and you're using like Trading Light or whatnot, you could probably very easily see if people are hitting into those resting orders or not. And if they are, and you know that resting order is actually allowing itself to get filled, that you know it's a real order. But having said that, just if you have $30 million on the bid and they start hitting in and they filled 3 million, it doesn't mean that the entire 30 million is going to get filled. This is why I don't like heat maps, right? Because it's all theoreticals. What if? What if this guy fills this much? What if that guy doesn't fill that much? With print, it's not theoretical. It's this happened. I see it. I execute it. All right, I'm gonna leave it at that because that's probably a good place to stop. I like the I like that argument of transactive volume versus theoretical. Boys, the bulls are fighting here. This is looking good. How we're compressing on it. Like to see a bit of a thrust, which will tell me that they're here, and that I will be probably bidding after that. That's what I'm looking for. I appreciate that. Yeah, that's definitely a good way to go about it. Is that like when you have friends that you trust or whatever that you've been through some shit with, right? When you have good friends that you know are not idiots, you can put a little faith when they say something about somebody. Nothing wrong with that. But also, don't just put blind faith in anything. Yeah, I don't understand the wave thing. My argument with something like that is it's far too subjective for you to actually um, trade like that. I'm not saying nobody's ever. There's somebody's traded profitably with waves, I'm sure. Somebody's traded profitably with fucking flipping a coin, though. Alright, guys, I'm gonna hop off. I went a lot longer than I was expecting to. I was gonna try to make it a 30-minute stream. We did an hour. There you go. Alright, everyone, have a nice day.